Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 10, the group B problems from the exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, we are working on 10-38B for this video, probably this one and the next one. So let me get my pen. All right, so it says, excuse me, accounting for cash and stock dividends. So Inland Machine is authorized to issue 700,000 shares of $5 par common stock. The company issued 71,000 shares at $5 per share, and all 71,000 shares are outstanding. When the market price of common stock was $9 a share, Inland declared and distributed a 15% stock dividend. Later, Inland Machine declared and paid a 40 cents per share cash dividend. Journalize the declaration and distribution of the stock dividend, and journalize the declaration and payment of the cash dividend. Okay, so we have to, the first thing we have to do is figure out the value of the dividend, right? So we have the company issued 71,000 shares, right? But the market per share, now don't get confused, we're not going to use the par value of $5 per share. You're using the market value of $9 per share, and they're distributing 15%. So 71,000 times 15% times $9 a share gives us $95,850, which we're going to take out of retained earnings. So we debit retained earnings for the $95,850. Yeah, the thing about, before I go any further, the thing about this particular problem, and again, these are just, this is a problem, basically a word problem. And in word problems, you have information that's directly related to answering, solving the problem. You have information that has nothing to do, with solving the problem. And then 3, you have information that you have to manipulate, meaning add, subtract, perform some kind of computation in order to be able to get the information that you need to solve the problem. All right. So when we're looking at this, if we're going to just pay we're going to have a stock dividend and a cash dividend, we could care less about the authorization and the number of shares, right? Or the $5 per par for common stock. We could care less about that. Yeah, we're concerned with the 71,000 per share. I mean, 71,000 shares issued and outstanding. The $5 per share doesn't come into play, right? Because it's at the market value that we're going to worry about when it comes to the stock dividend that we're going to be concerned with. So, just be aware that as you read this, there's giving you, especially these dividend problems, you do have to, they give you the information for the stock itself, but you have to pay attention to what you need and what you don't need. So when we're doing the stock dividend, yeah, there's 71,000 shares outstanding. They're paying a 15% dividend, but what's the market value? It's $9. It's not $5 per share. And that's what we use in order to determine how much we're going to take out of retained earnings. And because this is a stock dividend, we're not paying it out in cash to the shareholders. We're giving them, stock, right? So we're going to create additional stock. So when we create the additional stock, you know, we have 71,000 shares, okay, and that's at 15%. But now we're creating the stock, all right? So we go back to the par value, not the market value, right, of $5 to say, okay, that's how much additional stock we're going to create. So 71,000 shares at 15% at $5 is $53,250. So we're going to credit common stock for $53,250. Now, of course, if you've been watching the theory videos or working through these problems, you'll know that I'm a big proponent of backing into this paid-in capital in excess of par, okay, account. Paid-in capital in excess of par. Because remember, this is par, okay? The difference between the two is the excess and paid-in capital. So debits have to equal credits, subtract one from the other, and you get the amount of $42,600. We don't have to figure out the difference between the $5 and $9 and then do this mathematical calculation again. So that's a lot of extra work when we can just do one simple calculation of one simple subtraction of 95,850 less 53,250 to get $42,600. So we've backed into that amount for the paid-in capital. Okay. You could do it the other way if you want, but you don't have, you know, that's a lot of extra work, and this is just a lot easier to just back into that amount. Right, so then it says journalize the declaration and payment of the cash dividend. So pause the video here, copy this down if you have to, because I'm going to erase it. All right, so I'm erasing. All right, so journalize the declaration and payment of the cash dividend. Okay, so what are we looking at in the cash dividend? Well, we still have 71,000 shares, right? Now let me just look at this here. Just think about this for one quick second. Okay, yeah, I stuttered just for a second. I might pause the video because I was looking at this again. Okay, and it says the company issued 71,000 shares at $5 per share, and all 71,000 shares are outstanding. All right, so I know 71,000. When the market price of the stock was 9, Inland declared and distributed a 15% stock dividend. And here's the thing, okay? You have to, you know, it sounds strange, but a lot of people, you know, they don't take the time to read, okay? Notice this word here. It says later, okay? If you don't catch this word later, that means you're going to get this second part wrong. And the reason why is because if you just go and say, okay, Inland Machine declared and paid 40-cent per share cash dividend, what you're going to do is you're going to take this 71,000 and you're going to multiply it by 40 cents per share, okay, in order to calculate how much is going to be the declaration of the dividend, okay. The problem with that is that that's not how many shares you have. Okay, you don't have 71,000 shares. Yeah, it says, you know, issued and outstanding 71,000 shares, but if you know, it says when the market, and notice that this is about reading, okay? This is not about financial accounting or, you know, working through the problem. It's about, can you read a problem, all right? When the market price of common stock was $9 per share, Inland declared and distributed a 15% stock dividend. That's what we did for number one here, right? But then it says later, Inland Machine declared and paid a 40-cent per share cash dividend. Well, what happened in number one, right? In number one, now look back to the journal entry I told you to make, you'll see that we created an additional $53,250 of common stock. All right, we credited common stock for $53,250. So what we have now here is, when we're going to do this declaration, okay, we have 71,000 shares, which is our original amount right here, but we have to take into consideration the additional $53,250 of value that we had created from the stock dividend. So if I take $53,250 and I divide it by 5, I get an additional 10,650 shares. Okay, so 71,000 plus 10,650 is 81,650. Right? So now we have 81,650 shares, okay, of stock. And now we can calculate the cash dividend by multiplying it by 40 cents per share. And that gives us $32,660 that we're going to pay out in cash as a dividend. All right. So we're going to debit our retained earnings, because we have to take it out of retained earnings for the $32,660. Right. And we're going to credit dividend payable, because we're going to pay it out at a later date, on the payment date. So we're going to credit $32,660 as a dividend payable. That's a liability. So that's the declaration, and now we have to make the payment for it. Right? So we're going to credit cash, because we're going to pay it out, right? And we debit, debit the dividend payable. We're paying off the liability, right? And that washes out. The credit and the debit wash each other out. So we're left with taking the money out of retained earnings, and we're paying it out in cash, all right, to the shareholders. Very similar to accounts receivable or accounts payable, all right? So the real catch here was, did you see the word later, and did you take into account that we had increased the number of shares from 71,000 to 81,650 because of paying out the stock dividend, the additional creation of stock at a previous moment in time. Okay, right. So that's it for that particular problem, and that was a little wrinkle. Again, go back and watch theory, or watch this video again if you didn't understand it. And if you still don't get it, then feel free to telephone and speak with an instructor. All right, I'll see you in the next video.